Welcome to Me and the Market Goliath podcast. I'm so lucky to be joined by a friend from Malaysia to talk about investing, his life, his happiness when it comes to making the trade-off, quitting his job and doing something that he really wants to do. I welcome Chris today. Chris, how are you doing?
Great. Thanks for having me, Kelvin.
Chris, tell me about your background. I know that you work for a lot of different companies in the past. You have a lot of experience when it comes to consulting. So I'm sure my audience would want to learn more about you.
I kind of did a number of things. Started out as an engineer before then management consultant. And the way I did it was when I made that switch, I primarily focused on consulting for energy, oil and gas in specific. And then I kind of pivoted towards tech in the end. So I've kind of been around energy consulting, and I moved into tech when it was early days of 2019, 2020, just before COVID actually. And so that was also the boom time for a lot of the Southeast Asia tech startups. And I was lucky to get into it at the right time. And I think at the time for me, when I joined, it was really about going into an area where there was going to be a lot of growth, where I could see myself growing in. And so I did that. But, even before going into tech, I kind of had this plan that I wanted to be financially independent in my early days. I had some past experiences when I was much younger, the global financial crisis, and in 2014, I also had the oil crisis. And those two formative experiences made me kind of want to be financially independent as quick as I could. And so that kind of drove me also into learning more about business and economics. And specific to that, it's business and economics and its influence on human behavior. And I thought that was a very interesting thing to get more into, particularly from the perspective of a business owner and as well as a wage earner, and how those two roles kind of play on each other in a capitalistic society. So that was many years ago. And recently I left my tech job 6 months ago when I achieved Coast Fire. And now I'm just kind of stress testing my portfolio. But obviously, the plan is to continue to seek active income until at least maybe my early 40s. So we'll see how it goes.
I've known you for a couple of years already. If I were to describe you as a person, you're someone who is very logical, very business-minded, and you understand what's going on in the economy. You're someone that has a good knowledge of finance, how to manage your money, making logical decisions, understanding what the trade-offs are when you come to make a decision. I know budgeting is a big part of how you manage your finance. Can you explain to me why budgeting is so important and maybe elaborate what are some of the challenges that you have to deal with?
Just talking about financial independence and retiring early, I think that whole concept is hinged upon being able to control your expenses, not just at the current moment, but also in the future. So for me, budgeting correctly, it's really a tool that allows you to understand how your current and future expenses as well as income is going to be. And if you think about it, knowing that data to making it relatively accurate is going to help you build a very rudimentary kind of DCF model. And then you can kind of use that as a basis for which you can plan for early retirement. So budgeting to me is really about making sure that you're able to control how much your life is going to cost. And based on that, then you can kind of derive how much happiness is going to cost you at different stages of life. So I look at it as just one of the key requirements to being able to reach financial independence, particularly if you want to do it early, and particularly if you are a wage earner, because you have so much more certainty then compared to if you were a business owner. It's kind of difficult. For me, I never really did business. My whole background was always in having a stable income, having a job. So it's easy for me to do the budgeting because month on month is quite stable. I don't have a lot of uncertainties. I don't have a lot of capital outlays, aside from obviously the big ones in life, getting married, buying a house, buying a car, and so on and so forth. But yeah, I've been budgeting, I think, since 2014. 2014 was also the time where the global oil crisis happened. I was in a company at a job and that company almost went under. And I remember this vividly because I was in Australia. I was sent over there for a job, and I was paying for the hotel out of my own expense, and which I would claim it back later. And I was reading the news about how the oil had crashed and companies were going under. And I felt really afraid, actually a bit paranoid that I wouldn't be able to go back to a job and I would be stuck there. So that kind of was the impetus for me to really start dwelling deeper into personal finance and just getting more into that.
So where do you start when it comes to budgeting? Like, how do you start?
The first thing for me when I did it was kind of have a bucket system of needs and wants. So the needs, I think, is from a month-to-month basis, it should be fairly stable. I mean, you can look at your major costs, housing, transport, food, and that shouldn't change too much on a month-to-month basis. And then you have your wants, which are a little bit more discretionary. And those things, it's harder to kind of budget for those. But what I find useful for myself is I allocate a certain amount of funds at the start of the year as a discretionary fund. And then as the year goes by, I just draw down on it. And then towards the end of the year, when it's low, it just tells me that I need to kind of look out for how I'm spending my money and not going overboard with spending.
I think budgeting is not easy. The reason why is you have to be very disciplined, right? And when it comes to expenses, you have to be able to, at the end of the month, reconcile all your transactions and to track how much you've spent and earned. So there's a lot of disciplinary behavior that you have to conduct in order to really know how much you're spending and really work towards that retirement goal. So what are some of the challenges with budgeting from your past experience?
Well, I think the discipline part is the most important one, right? So a lot of people, after they go out, have dinner, it's always a pain to kind of mark that down, how much you spend on dinner, particularly if you're going out with friends and there's a split bill and yet there's that all that reconciliation at the end of the month. And if you have sudden expenses that pop up, it's kind of hard to balance it. There's really no shortcut to that. I think I started early and kind of built that habit into the way I did my budgeting over time. So to me, it's kind of almost second nature by this point. But also because I've done it for so many years and I kind of have a greater understanding of how my money is getting spent. So I kind of have like this subconscious feeling mid to late month that, I've kind of spent enough on food or drinks. I kind of need to like tone it down. Sometimes I might, if it's a small expense, I might just not log it. But if it's a big expense, then I try and be a little bit more conservative. So I might do some rounding up and I'll try and put in costs as a buffer. And that I find tends to help me. At the end of the day, I think budgeting, you're not hoping for it to be accurate to the dollar. I think if you can get it to the nearest 100, even the nearest 1,000, that's good enough. Because all you really want is to have that feeling of control over where your money is being spent. It's not so much the down to the single dollar cent that you want to control. It's just that feeling of knowing when to stop. I think that's the most important thing.
We invited founder and CEO of Seven Investing, Simon Erickson, to share with us his insightful knowledge on investing in innovative companies and what Seven Investing is all about. So we partnered up with Seven Investing, which you can support my podcast, Me and the Market Goliath, today by signing up to Seven Investing's annual newsletter subscription. By signing up, you'll receive 2 of their highly recommended stock picks per month, research reports, video deep dives from their lead advisors, and monthly subscriber calls, including all of their previous stock picks and exclusive access to their members-only community forums. You can use promo code Goliath to enjoy a further $29 off on their annual membership subscription for just $170. So maximize your market intelligence with Seven Investing's newsletter service and lead advisor insights today. There's an aspect of budgeting where you have to save. A lot of people, when they talk about saving and retiring early, they think of how to save more instead of how do I earn more so that I don't have to worry so much about my expenses. I feel like people think of that concept a lot and focusing on saving. What are your thoughts on that concept? Is it really about going on the offense and trying to make more money or either obtain multiple streams of income so that you don't have to worry so much about your expenses. Don't have to round up to the nearest dollar and see how much you've saved.
I think it really depends on which stage of life you're in, particularly if you're a fresh graduate and you've just entered the workforce. Clearly, your income is not going to be a lot. And then it means that managing your expenses is going to give you a bigger sort of impact onto your net savings at the end of the month. It's also important to start early because you build that habit. And as I said, as time goes on, you enforce that habit and it becomes easier, right? When you're sort of in the mid of your career or when you've had a couple of years working, then you'll see your income grow exponentially. And so it's important to enter that phase of your work life with a good habit of tracking your expenses and knowing where your money is going. Because oftentimes a lot of people, when they start earning more money at their job, that's when lifestyle creep happens and you see them spending more money. And and then it's just this rat race, right? And you never get off the rat race because the more you earn, the more you spend. And when you look back, you always see like, I haven't really saved anything. And then you're always chasing for a higher salary. But then when you get that higher salary, you're always chasing for a new car, a new house, nicer holidays, and so on and so forth. So I think clearly, as time goes on, you want to focus more on the income side because that's over the long term going to determine a much higher percentage of success. But at the start, it's good to build that habit and also focus on the expense side. So as time goes on, your expenses remain flat, but your income is kind of linearly increasing to the right and up. So that's how I did it.
Taking it a step further, do you forecast in terms of how much you allocate for on a month-to-month basis? Because I think finance gets really muddy, especially when it comes to investing, because when you're investing into the stock market, a lot of people like to forecast how the investment is going to turn out to be in the next month, year. But there's a lot of things I've learned over the years that forecasting is actually very difficult. There's a lot of changes that you don't expect, especially in life, dealing with relationships. You don't know how your significant other is going to change your spending habits. So how do you sort of account for these sort of uncertainty when it comes to budgeting and lifestyle creep, for example?
Well, I think it's hard. Definitely it's not an easy thing. Coming back again, right? You just want to make sure that you're moving in the right direction. And it's not so much about the accuracy of at every month end or every quarter end, how much money did I save and all those sorts of things. But what you're working towards is having on a monthly basis net savings after minusing all your expenses and seeing those net savings over time increase. So the gap between income and expense as time goes on kind of widens. And then that gives you a bit more certainty and comfort to go into investing. And it kind of diminishes the importance of tracking accurately as it goes on. I think when you're doing like projection forward in terms of making sure your portfolio grows to a certain amount or even retirement savings, there's going to be a lot of assumptions that you have to put in place. But those assumptions oftentimes are very hard to quantify. So for example, if you have a portfolio, you need to make an assumption as to, well, what is my annual return on that portfolio going to be? There's also that consideration of how that number would look over a long period of time. So it's easy to say that if you look at the S&P 500 index and you say, commonly people say the S&P returns like 10% a year, but that's only accurate as of the last maybe 40, 50 years, right? So history doesn't always repeat itself, but it does rhyme. And I think you'll never know what minimum return on investment that you need towards the end. It's something that you can only figure out as you look backwards in time. So what's most important is making sure that you build in sufficient buffers into your projections. And if you don't, for example, hit a certain ROI of, let's say, 7, 8%, you have a buffer there that can kind of correct itself over time. That's how I would do it.
Everyone's definition of retirement might look very different from one person to another. So what does retirement look like for you?
Well, for me, retirement is kind of a stage of life for me where I have little worries about spending money. So removing that cautiousness, maybe spending too much money or spending too little money, just basically not making any decisions on life based on money within reason, right? So it's a life without worries about spending money, with ample free time to kind of pursue your interests, and doing both of that in a way that maybe is not so bothered or unbothered by societal expectations, right? Society is going to tell you that, oh, at 30, you're meant to be working hard. So you're going to prepare yourself to start a family, to get settled down. And then by 40, you're going to be raising kids and everything. And to me, that's one way of living. But there's also many other different ways, right? And so one of that's early retirement, which is something that personally I'm quite interested in. So retirement for me, there was a famous Greek philosopher, Epicurus, and I remember what he said was that being happy is kind of just knowing how to be contented with life, and ultimately that the goal of life is just to be happy. So if you have aims for a simple life, then you don't actually need a lot of money. And if you don't need a lot of money, then retirement actually opens up a lot of it can come about in many different ways. So that's kind of how I look at it. In practice, I haven't really figured out what my retired life would look like, but I have set some criteria for it. So the first is, whatever it is, you kind of want to be physically engaged and physically active. So for me, that would be, I recently have an interest in spending more time in the outdoors, on the ocean. So I like stuff like sailing and surfing and hiking and all those things. The second is like being mentally engaged. So it could be doing something that is meaningful but unpaid, like voluntary work, mentoring, social enterprises, and so on. And then finally, it's about having and maintaining quality relationships with people that matter to you. And so I think those three things are kind of what I would focus in retirement. And I would, as I said, I would kind of do it in a way that I'm not going to worry so much about the money aspect, because I've kind of have some comfort level there.
Yeah, that's very interesting. I want to draw on that retirement concept a little bit, because you did mention that you can't seem to picture what retirement actually looks like. But I think if you look into like YouTube media or like just people that I know, it's like they always put retirement like, oh, if I achieve X, I'll be happy. And that's retirement for me. But most often than not, I've realized that once people achieve X, they're not happy. They want something. And it's crazy. Personally, for me, I think it's right to not know what retirement is like, because I do think that by thinking like that, you're accounting for uncertainty. I think that's the great thing about learning about investing and making these decisions, because there's a lot of things that we don't know. And once you've achieved that, that thing is going to change. Like what you crave for is going to change. So that's really interesting. But can I ask you a question? Like, do you associate retirement to a certain object or a certain achievement? Is that picture clear in your head at all?
I think not at this point. Probably it's not so clear where the end destination is for me, but I think the direction is. And like, talk about investing for retirement. First is, you mentioned people trying to hit a certain number, and then when they get there, it's kind of not enough. And I think that probably stems from, in part, lifestyle creep. And secondly, it also depends on the particular person's kind of attitude towards legacy wealth, right? So there's a book by Bill Perkins called Die with Zero, where he talks about living life and not leaving anything at the end of it to your kids or the people that are around you, right? So that's one side of it. But obviously, we live in a capitalistic society. And so there's obviously consequences of dying with zero and not giving your descendants a head start in life. So for me, where I look at it is, I'm kind of quite set in the number that I want, because I've kind of done some rough calculations about how much my life in the future might cost. And that number enables me to go a few different routes. So one, it could be staying put where I am, but kind of living life very simply. And then the other option is obviously going to a lower cost of living area and then having probably a marginally better standard of living there. There are a lot of countries in Southeast Asia that it's going to be cheaper to live on than in Malaysia. And then the third option is there could be also a route where when you retire, you're kind of still doing some sort of part-time work that gives you a little bit of active income, but just enough to cover your living expenses, so you don't draw down on your capital of your portfolio. So eventually, you're not really taking money out of your portfolio, and you're allowing it to compound over time, and you're just living off a very minimal active income. So for me, when I look at my retirement, it's just giving myself optionality in the most, I guess, achievable and early way.
Speaking of retirement, you did have a glimpse of what retirement is. I know you took sort of a short sabbatical from your job. I know your previous job wasn't easy. I'm sure there are a couple of takeaways from that experience. I'm not going to mention the company, but I think I'm curious to know what has led you to make that decision. Hey, I think I need to sort of prioritize myself, my health, and my happiness. So can you speak to me a bit more about that experience and what quote unquote retirement is like for you?
Yeah, well, for me, particularly retirement and, just getting out of a job that maybe you don't feel the best about there's this concept of push and pull. And push is you can't wait to leave work to kind of retire because you don't like your job or the vibes are off with your boss. And then the pull is you can't wait to leave work because you're excited about doing something else. And so for me, it was more of a pull in the sense that I had built up a pot of capital that could support my very simple life. And for me, it was a chance to really test that in the real world and see how I felt about it personally from a psychological and mental perspective, and really understanding how my life would look like on a sabbatical. I think the initial phase of me not retiring but going on sabbatical was really just getting to grips with the transition away from a life structured around work, right? I realized that I had a lot of bad habits in terms of sleeping, in terms of eating, and just maintaining relationships because I prioritize work. And when I left work, I think it made me wonder more about how I was living my life, particularly with my health and my mental wellness. So it was a difficult time at the start, but as I got a bit more comfortable with that transition, then you kind of have a green space and clarity of thought to kind of structure your days a little bit more productive. So for me, it was an interesting experience, but eventually you kind of want to be productive and you kind of want to do things. So I'm actually looking forward to getting back into work, but things that are probably more interesting.
This could be an assumption. I think one of the frustrations with corporate work is that most often than not, you don't have the luxury to do what you want to do. And there's that trade-off where how about investing my time and getting the most out of that experience? It's not easy to juggle, given that you could be super busy from Monday to Friday, right? And you have no time for anything that you want to do until you have Saturday and Sunday. And Saturday and Sunday is usually a very busy day, well, from my experience, because you got to make up for the admin's work or household chores that you haven't done from Monday to Friday. And you feel burnt out by Sunday. And then the whole process of corporate work starts again Monday to Friday. So I think there's a lot of frustration, and it causes people to want to reconsider their career path. And then you think of your own pursuit of happiness. And obviously you went through that process recently, right? And it's not easy to make that judgment call because there's a lot of consideration, your life plans ahead, like getting married, so on and so forth. What are some of the criteria you have to think of before you make that decision of, it's time to, move on? And how do you balance? Because happiness is also something that you can measure, right? You can't go on an Excel and calculate, this is the return I get. So how do you sort of make a decision that makes sense and that you're content or you're happy about that decision?
Yeah, I think it's a hard one, right? You never really know until the fact happens. But what you can do is make sure that whatever happens, you're not jeopardizing yourself. And so what I'm really getting at is about optionality. Like you said, it's important to have some financial security in place before you make that decision. For me, it was I achieved Coast Fire. And so I was comfortable in that whatever happened, I wouldn't be going down a path that I wouldn't want to. And I always had the option of going back into full-time employment, you know, but coming back to making that decision, I think for me is if you're in a company or in a job where your values don't personally align, then it's probably better to leave quicker than later, because you might eventually become a person that you despise if you stay too long. So yeah, so one is just making sure that you have runway and you have optionality if you do it. But then also on the personal side, really dig deep and ask what character you want to be, what values that character has, and does your current situation fit that or not? And then coming back again to the push and pull, it shouldn't be, I want to run away from this job because I hate it. It should be, I want to run towards a bigger life goal. And that decision is made in support of that. So you're not in a way receding backwards, but you're actually progressing forward in, just general life development. So for me, that was kind of the few things that I thought about. And I think generally also it is when you're in a job and if you have trouble waking up, dreading work, then it's definitely a sign that you need to do something about it. And it's not necessarily that you have to quit your job. It could be just taking a sabbatical, taking some time off, changing jobs and stuff like that. So I'm the type of person that tends to worry a lot about things. And so for me, when I made the decision to take some time off, it was giving myself the opportunity to balance my other priorities in life and to see things more clearly for what they are, away from not distractions, but away from the things that's work related. So when you're in full-time employment, I guess for me at least, it was a lot of worrying about my performance at work, how my boss thinks about me, and so on. But when you're on a break, you don't really think about those things that much. You just wake up in the morning and you say, well, I'm going to do ABC and ABC is going to make me happy. And then that's just the day, right?
The guiding principle of investing, making decisions, just now you said when it comes to picking a job and going through the whole process of working for a company, it's important to figure out early. You mentioned that it's important to figure out where there's an alignment with what the company direction is and in terms of what you want to do, and figuring that early is super important. I think that guiding principle is very similar to investing in a company with your capital, because if you continue to invest in a company that you like initially, and then you figure out that, oh, this is not what I want to invest in. I think being able to figure out early is so important, just like investing and continue to compound your finances. I think that guiding principle is so important. It's often not talked about enough because a lot of people just invest in something and because, oh, they have this sentimental value, emotional attachment to this thing, they'll try to write it out. But they don't realize that the consequences of not cutting your losses early is very important, to make that judgment and to build that trait to be able to do that. I think that's a very valuable skill in any decision that you make in life. And I think it comes down to self-awareness, because Chris, I feel like you're someone that has a high level of self-awareness and you're very observant from my observation. So how do you build that trait? Is it, because of potentially your childhood, growing up? I think that could play a role. I don't know, maybe you could shed some light on that.
So, it's hard to be completely objective in life, but it's also very useful if you could do it. For me, I tend to seek out environments and experiences that put me out of my comfort zone. And by doing so, it kind of forces me to really dig deep and understand kind of what works and what doesn't work for me. and where my strengths are and also what my weaknesses look like. I studied engineering. I realized I sucked as an engineer. I went into consulting and I thought that I couldn't deal with the politics and just the way business was done. My personal experience, not saying that all consulting is like that. I went into tech, and obviously tech has its own pros and cons. So over time, those experiences put together and being in those different scenarios forces you to mix with many different groups of people. And you kind of learn a bit more about yourself each time. And over time, you kind of learn that based on your own character, this sort of scenarios work for you best and those sort of work against you. I tend to think a lot about this when I am making decisions about life. I wouldn't say that I'm a naturally self-aware person, but I do try and interact with people in a way that I ask them questions about, how they think, and I kind of reflect that against my own understanding of life. And I find that it teaches me, you can always learn something from people if you can see their point of view. And so just by talking to a lot of people and seeing how people live different lives, I think it teaches you a lot about yourself and your likes and dislikes. And that helps you, think about what kind of life you want. And if you can think about what kind of life you want, then you're kind of working towards something, and you can kind of mix and match your strengths and weaknesses towards achieving that. But it takes time, right? It takes time to try and build that skill. So it certainly hasn't been easy. I think I'm still learning a lot, actually.
Speaking of making decisions throughout your whole life, making decision revolves around being able to understand the concept of investing. So what does investing mean to you personally?
Yeah, I think investing is it's a bit of a tool. I think it's a means to an end for me. And the end, obviously, having freedom of time and money to pursue your interests and just do whatever you want. So investing, if you invest well, it kind of accelerates that journey towards freedom. And if you invest badly, then it doubles the amount of time. I think in terms of investment philosophy, again, it's coming back to knowing yourself and knowing what happiness looks like to you and knowing whether or not you would like to die with zero or have legacy wealth, and knowing how to invest in a sustainable manner. That really speaks a lot about your understanding of yourself, actually, right? Because if you know that you want to live a simple life, that sets a ceiling for how much money you need. And if you can set a ceiling to how much money you need, you can very easily plot backwards as to how you're going to get there via asset allocation and investing. So investing to me at the end of the day is just a tool for me to achieve freedom in a quicker way. It gives me the opportunity to live my life how I want to in the nearer future rather than later.
I think everyone's definition sounds very similar. Like, I've interviewed so many different people. I think the overarching theme of investing is very similar. Like, ultimately, it's like buy some time, do whatever I get to do, not having to worry about finances. But I think there's a deeper element to the definition of investing, because I think there's several guiding principles. Like, you learn from a lot of the greatest investors, right? For example, Charlie Munger always homes in on the concept of you don't have to be a genius. You just got to be aware of the potential mistakes you make. Just focus on the mistakes that you might commit and try to avoid those. I think you'll get very far in life. I think that's really interesting. So given that you have so many experiences working for so many different companies, engineering background, you worked for oil and gas company, if you were to run a company, right, given all the experiences, the management experiences that you have, and now as a consultant, in order to make a company successful, like, how would you run it?
Well, I think if we're talking about like a new company, right? If it's a young company, I think the most important thing is to get to free cash flow as soon as possible, because then it's self-sustaining, right? Statistically, I think most companies fail because they have a cash crunch or they run out of money. And so if you're joining a new young company, getting to free cash flow is going to buy you a longer runway, an infinite runway provided you can control costs, right? So that's the first thing. And then when you're growing and trying to scale, probably the next thing is to make sure that you have pricing power as that process unfolds. And it's so obvious when you look at tech companies today, right? Part of their go-to-market strategy is reducing price to grow. And you can see that it's going to be very difficult to unwind it, particularly in this high interest rate environment. And by the way, that's something that you can never control, right? So you can only control how you price your products. And if you're in tech and interest rates are high, it's going to be very difficult for you to increase your prices without dangerously hurting your user growth. So maintaining pricing power is the second thing. And then obviously over the long term, running a company, you want to ensure that you have sustained growth in retained earnings. If you have good earnings growth year over year, you can be relatively comforted by the fact that you're going to be able to go out into the capital markets and raise funds cheaply via equity or debt, as compared to if you had a bad track record of retained earnings, because it's going to be a high cost to issue debt. It's going to be very expensive for you to sell equity as well, right? So getting to free cash flow as soon as possible, maintaining pricing power as you grow, and objectively target retained earnings growth. So those three things. Success factors, the most important is you have built a fit for purpose team, which is to say, when you're a small company and if it's young, you probably don't need a player because they're usually quite expensive. You can probably start with players and then upgrade later on. So that's one thing I'll look for, making sure that we're paying a competitive but suitable market wage. And then obviously choosing the right sort of people, right? So there are two types of employees brought. One is mercenaries who are just there for what they can get out of the company. And there are missionaries, which are there because they believe what the company can do, and the money side or the compensation side of the equation isn't as important to them, right? So choose missionaries, right? Prefer missionaries over mercenaries. Building the fit for purpose team is going to make sure that you can get execution done well. I mean, nothing else matters except execution in building a company, right? So making it a key strength is also key. And part of that is keeping things simple as to how the execution is done. And that is reducing layers of management. I can't tell you how many times I've been in situations where you go into a company and you see layers upon layers of managers just doing management reporting. And that's all they do, right? They speak to the people who are doing the work, and then they just report on what those people have done. And then that report gets absorbed and synthesized by a higher, more senior manager, and the whole process goes on. So management reporting is not a value add. Decision making is, but you don't really need a big team to do that. So having a lean team, fit for purpose, and focusing on execution, I think those things really make a difference.
I feel like this is actually quite common, right? Companies have layers of management reporting lines. Like, is there a reason? There has to be some sort of underlying reason, right? Because I think it's costly. It's quite costly to implement layers of reporting lines. And then what you get out of it is potential politics, right? There's a lot of emotions when there's so many different reporting lines and a lot of integrating. So why do you think companies do that?
In today's world, I mean, if you think about the role of an executive at a company, the most important thing that they're there to do is to make the right decision. But in a world today that is so complicated and increasingly complex, the types of decisions that they need to make are very difficult to do. And whereas in the past, a small team of senior leadership or executives could make those decisions, today it's very difficult to be able to make hard decisions and do it at pace and at scale. So that's probably one reason why you need so many different managers, so many different layers. The next consideration there is also because it's much easier to control the business if you have different layers of managers, because what tends to happen in big companies is you have a function kind of leadership, and then you have geographical leadership, and then you might have business unit leadership. And you view those three things in different points of view. It's a different set of considerations and decisions that are made. And so as organizations get more complex, just happens to be the fact that you need more people to provide input into those decision-making processes. And with AI and ChatGPT coming in, you can see, and it happens in real time, right? If you look at what's happening with Citibank now, they're trying to get rid of 20,000 people because what they say is that they want to simplify decision-making process, leverage AI and to help them make those decisions better. So things are certainly changing with layers of management, but it is quite interesting to see how that would turn out. One important feeder into this whole phenomenon of layers of management, I think also is over the past couple of decades. If you look at the rise of MBA programs being started across the world and just the pipeline of people coming out of this is just tremendous. And most people who do MBA programs typically would like to get a job in management at some point. If you have a senior leadership team who has come from an MBA program, it tends to be a self-fulfilling prophecy where they hire more MBAs and then it just goes on and on and on. So yeah, layers of management is one of those things which seem to be very sticky.
You've mentioned a few, I'd say, quality factors that makes a company successful. A lot of times, maybe people think management or business is really about quantitative, right? Like a business, you look into the quantitative aspects of a company, how much free cash flow they're generating, gross margins. Those are the quantitative aspects. But then I think oftentimes is the qualitative aspects that could potentially hurt the company the most. When I look into a company stocks, I try to pay attention to the qualitative aspect because that's super important. What are the interests of the management team? Are they here just to get a paycheck and exit? But it's not easy to measure that, right? The company culture is not something that you get to experience as an outsider. From my past experience, if I work for a company, once I get out of it, I might not have a great taste or experience of that company because of the culture. So there's that disconnect with analyzing a company from a qualitative aspect. So I'm personally curious to know, obviously you worked for so many different companies. Do you think the qualitative aspect of a company is more important than the quantitative aspects?
You definitely got to look at them both. The qualitative, I think, for me is probably more about the strategy, right? And the whole objective, the vision and mission. The quantitative part of things is just an assessment. It's just a measurement of that journey towards achieving those vision and missions. As you say, it's very difficult to get an accurate gauge of how things are doing, particularly in today's world. If you're investing into companies, especially public listed companies, a lot of the movement that drives the share price is the earnings report, is just the numbers that they show Wall Street, right? And sometimes the qualitative aspects tend to get lost in all that noise. But I tend to look at it as if a company says they're going to do something and it says that they intend to achieve that over a set number of years. In that set number of years, if you return to that company and look at the achievement, did they actually do what they said they were going to do? Did they position themselves in the right sector? They focus on like the ESG initiatives that they said they were going to. That tells you a lot about kind of how that company is being run. And the qualitative side is at best, I think, an inaccurate assessment. So you can never really know. And I guess this is kind of the reason why also it's very important to talk to people who have worked at the company to understand how the culture is. Because if you have a company that is very strong on earnings report, making numbers glow, but with a bad culture, I think that spells some trouble for the long-term survival and sustainability of that company.
I want to move on to the next segment of this podcast and maybe touch on personal finance a little bit. What I've realized over the years is that as a corporate worker, it's important to calculate your salary by hourly rate and not monthly salary. Some people make that mistake, right, when they calculate, because I realized working for a company as an employee, you're just a number to them, but you don't calculate how much you're getting from an hourly basis because you could be working like 15 hours, 16 hours, because that job that you're doing requires you X amount of hours, right? You could overtime and to work until 12 a.m., 2 a.m., and then you divide by the number of hours. It's like, shoot, I only make this much money if I calculate it by an hourly basis. I know you've had your fair share of experiencing as a corporate worker. Why do you think it's important to calculate your salary but on an hourly basis?
Well, personally, for me, I think you kind of always want to move up the value chain, right? It's not very nice to say this, but one of the ways you measure value is by the amount of money you get in exchange for your time. Because that's essentially what a job is. You're trading your time for money. And you want to, over time, be able to trade a lesser amount of time for a greater amount of money. And it kind of makes sense because if you don't adopt that, then it's going to be very difficult for you to retire eventually because you're always going to have to spend more time to get more money on an absolute basis, right? There are certain situations that do warrant you accepting a lower hourly wage, and those situations typically involve intangible benefits, like if you join a particular company at a lower position, but has the promise of giving you career growth that you would not see otherwise, then I think it's okay to make those sorts of decisions, right? But by and large, you should, over time, on an annual basis, just look back and see, and hopefully you'll get a higher hourly rate because that's the only way that you're going to be able to retire.
I have a follow-up question to that. Do you think career titles are important? And the reason why I ask is because I think a lot of people get overly obsessed with career titles, right? I become a manager. Look, this is great, but your salaries actually could be very low. Like, if I were to ask you a question, would you rather have a career title, like a junior title, but you earn a lot of money? Or would you rather pick that, or would you pick the big, like managerial title, executive title, but your pay is actually not competitive at all? Personally, I think if you were to go for a career change and ultimately you want to retire early, it's the number, right? It's the salary that you're taking, because in order to jump from one side to another, like companies will look at how much you make previously and make that adjustment rather than the titles. Do you think that is the right way to think of titles? What are your thoughts on titles?
Titles are a funny thing, particularly because I came from tech, where titles don't mean much. But there are certain situations where a title is important. I'll give you one example. The most important is having a good title possibly would allow you to stand out in the eyes of recruiters. So if you had to choose a job, if you had two options for a job and they both paid the same amount, and let's say the scope of work is exactly the same, but one is in a big company and the other is in a smaller company. And in the smaller company, you get a bigger title. In the bigger company, you get a smaller title. But the compensation and the work is the same. Then in that case, obviously it makes more sense to maybe choose the better title because it sets you up for more opportunities when you are looking to go on to your next job, right? There's that whole process of making sure that you are able to access the jobs market in the most competitive fashion. And titles, unfortunately, do play an important role in terms of how the company, through the recruiter, is going to value you. Having said that, there's also that scenario where if you have achieved a certain level of financial comfort and you're not really looking to prioritize your career relative to, let's say, your family, then titles shouldn't matter so much to you because you are not looking to leverage that title to get something out of it, right? So for me, it really depends on the stage of your career that you're in and what you intend to do as your next move. Because if you are saying that you're perfectly happy just staying as an individual contributor and you have no aspirations to manage people, then clearly a title shouldn't sway you because effectively it wouldn't make any difference to you anyway, right? But if you're someone who says, I would like to grow my skill set, I would like to possibly manage people and companies in the future, then title does play an impact because it can help you get there faster, possibly.
That's really insightful to anyone who's listening to this podcast going through that career change and contemplating whether they should go for a career title upgrade versus pay. So I think that's a very interesting insight. So I want to move on to the last segment of this podcast, and it's related to the country that you're from, which is Malaysia. I think Malaysia is growing on me. There are a couple of reasons. One is labor cost is very low. I'm not sure people are aware, maybe in the States or other places, or people from other places listening to this podcast. I think there's a lot of opportunities, and it's also a great place for retirement because everything is so inexpensive. Something that I've noticed, I've spoken to a lot of people from Malaysia, and I've noticed that financial literacy is not taught quite well in Malaysia. People don't have this concept of investing in companies, stock market. Can you give me a reason why that's the case?
Traditionally, Malaysia has not been a poor country. Malaysia has a lot of resources, particularly petroleum. And historically, the petroleum industry used to generate about a third of the government's income. So you see a lot of that income flowing into Malaysia, subsidies, making life easier for the population. And so, when life is a little bit cushioned with subsidies, there is less of a need to get better with money because you don't really need to optimize because you have a surplus of income. And so people don't tend to worry about it too much. And also in Malaysia, as compared to, let's say, Singapore or Hong Kong, the financial market is much less robust. Access to the common man is a little bit harder. And so you don't see a lot of people in Malaysia investing in stocks or similar investment type of assets. And it's been this way for a long time, right? So if I look back at the older generations like my parents, predominantly most of them, well, number one, they don't really like to talk about money because there's still stigma and taboo. And most of them just rely on property as an asset to maintain and grow their wealth, right? So they don't really know much out of that. And it's this way because Malaysia is not a global financial hub the way that Hong Kong and Singapore is. So the general awareness is just way lower. And the people are not very insistent on growing or learning more about personal finance because, cost of living is low, government gives a lot of subsidies, wages are okay. So you're not really in an environment that gives you much benefit with learning more about personal finance. You're just kind of midway, kind of surviving and just going on. So I think that's one thing that is pushing Malaysia a little bit back. In recent times, there's, of course, a lot of new developments. Malaysia is slowly becoming a little bit more known for Islamic finance. And of course, in today's modern world, there's a lot of exposure that you can get just going on YouTube and on Spotify for podcasts. And so I think it is changing a little bit with the younger generations, but it's nowhere near the standard to where Singapore and Hong Kong is. And, coming back to emerging markets like Malaysia and just the opportunities there, I think it's easier to do business in a less developed market like Malaysia. In some ways, it's a bit like a cowboy town, how it used to be many years ago. With lesser regulations, there's more opportunities for businesses to seize. And also in emerging markets like Malaysia, the governments tend to look to the private sector to help grow the economy. So you tend to see a lot of government grants and such flowing into the economy. And so it's interesting times actually to look at emerging markets. I mean, if you look at what's going on in the world, suddenly India has become just a hotspot of investment, right? And now look at Japan. Japan is apparently getting out of that 2 decade of stagnation in terms of their stock market. So, I mean, I don't know how Malaysia is going to look like, but I think it's going to be very interesting to see.
I want to go back to Malaysia in terms of why is it a great place for retirement? Obviously, everything is inexpensive, but something about Malaysia is like the pace of life is so unique. And people who I've talked to, if they were in Malaysia, they probably want to start some sort of lifestyle business, become an entrepreneur rather than working for someone. That seems to be more of their mindset when they think of Malaysia. Why is that? Is it because the startup costs are low? Maybe you can share in terms of going back to what retirement is. Like you said that, like what you've learned from retirement is that you cannot be passive, right? You cannot just be like, oh, this is a retirement. You got to be engaged in something. So that could be starting a business. So what are your thoughts on Malaysia as a place for retirement, but also starting a business?
In Malaysia, labor costs are low because if you look at the structure of the economy of Malaysia, a large portion of the economy is dependent on cheap labor. So in industries such as manufacturing and construction, you can't do it well if you don't have cheap labor. So that flows throughout the economy in the sense that if you have cheap labor, you're able to price your products on the manufacturing and construction lower. It gives greater access to people to purchase them. But on the flip side, it also means that wages are not as high as they are regionally. So there is a bit of a glass ceiling in terms of wages in Malaysia, where if you look at the distribution of good jobs, they tend to be very, very focused in certain industries and only in the capital city of Kuala Lumpur. So it's very difficult for people living outside of the capital to kind of achieve a reasonable level of income if they do not start entrepreneurial initiatives, like start a business, for example. So I think that's one factor why a lot of people want to start businesses in Malaysia, because wages are suppressed. But secondly, again, coming back to just the lack of regulations in Malaysia helps to create businesses there. And the government actually supports it by giving a lot of tax breaks for people to start businesses. So those two things, I think, push people to want to start more entrepreneurial ventures in Malaysia. Generally, I think if you were starting out as a fresh graduate in Malaysia, the common wisdom is to take a few years at a job and then go back into your family's business and help expand it. That seems to be the common route for a lot of people that I know as well. So yeah.
The crazy thing about Malaysia, I think it's such a unique country because I think the people there are very talented. Like a lot of people there are multilingual. They can speak multiple languages, and it's become a place for big companies to hire talent. And that's what I'm seeing. And I feel like Malaysia's economy is on its own, right? From my experience talking to people, they said, oh, like, the economy is the same, hasn't really changed much. Whereas if you look into other big economies, like people often talk about unemployment rate, that the finance sector is not doing well. But I think Malaysia, because it's quite reliant on its own resource and doesn't really have like a financial hub, I think these financial aspects of a country is often not talked about. And I think that's what makes Malaysia, in a way, a great discussion, because this country doesn't really focus on like the finance aspects. It becomes a place for retirement. It becomes a more attractive place because in Asian economies, I think it's very realistic, right? To retire in a place like Japan, Korea, Hong Kong, it's not easy. And it has to do with the financial system and to allow people to retire early. So I do think the emerging markets is very interesting because the reason why I want to ask you about Malaysia is because geographical bias is a big bias that people don't talk about, right? If I'm in the States, I'll probably more likely to invest in the S&P, US companies, but I won't look into emerging markets like, for example, Chinese companies or maybe Japan. And we're so accustomed to, in this country, I'll just invest in these stocks because I can relate. There's this sort of connection with the company because I'm located here. The bias is because I'm in this location, I feel like, oh, I know a lot about this company. But in reality, I think there's a disconnect because ultimately you have to understand the company's fundamentals. You need to understand the leadership team, the management team, what the direction is. And most often not, you actually lose out on a lot of opportunity costs because maybe you could have invested in a public-based company, a different economy, and probably would have made a bigger return than focusing on a company that focuses operations locally. We're almost out of time. I just want to say thank you so much for your time today and to come all the way from a different country to join my podcast to talk about your personal experience when it comes to investing, personal finance. I always wrap up with this question. What is the biggest mistake when it comes to investing your time and money?
The biggest mistake is not understanding your personal risk tolerance and the consequences of it on your investing behavior. So investing to me is probably 80% about discipline and focus in terms of controlling your emotions. And 20% is the study of stocks and sectors and economies. So if you understand yourself, you'll understand how much pain you can tolerate, and that dictates your buying and selling behavior. And that also determines how you look at what is a good return versus a too good to be true return. So yeah, understanding your personal risk tolerance is probably the biggest one for me.